Let us kick off this big hour with one of the world's biggest companies making a big-time commitment, and that is Nvidia. Nvidia finally unveiling exactly where and when it's going to be investing hundreds of millions of dollars in American manufacturing. Dare we say, it's a feel-good story. But it's also an important one for maybe the most important stock in the world. Let's talk about it at the kickoff Power Lunch with Christina Partsinevelos joining us from the NASDAQ. And yes, this does appear, Christina, to be not only big news, but a little bit of good news.
Yeah. Oh, no doubt. And the president is celebrating that. But as the White House's semiconductor tariff investigation gets underway and they determine what they're going to charge chip companies, Nvidia announced plans today to establish over 1 million square feet of manufacturing space in the United States. There's that feel-good story. The tech giant is going to produce Blackwell chips in Arizona and build AI supercomputers in Texas through partnerships with Foxconn and Wistron. With these facilities, it's expected to be operational within about 12 to 15 months. And this move is really part of Nvidia's previously announced $500 billion AI infrastructure investment over 4 years. Though when first revealed, it was last month, if I recall, the details were limited. It's still not entirely clear, Brian, how much AI manufacturing will actually relocate to American soil, given that the semiconductor supply chain remains predominantly centered in Asia and is incredibly complex, which was in that Nvidia blog post today. The Trump administration, though, views this development as validation of its tariff strategy. President Trump shared the news on Truth Social and stated, also from the Oval Office this morning, the higher the tariff, the faster they come, pretty much referring to manufacturers establishing domestic operations are promising to do so. TSMC is making similar commitments with its pledge of an additional $100 billion investment, while Apple has committed $500 billion over the next 4 years. These actions may establish a new precedent for how technology companies respond to current trade pressures. Lobby the president to get exempted. The winners will likely be semiconductor companies or hardware firms that can rapidly shift production to U.S. soil while securing favorable exemptions through their promised domestic investments, Brian.
Okay, not to bring politics into this or leave it out, because that's what I'd prefer to do, to be honest, Christina, but I've got to imagine these kinds of capital commitments are not made in a matter of weeks. These must be multi-month or multi-quarter or multi-year type plans. I wonder if they're bigger than any president. I don't know.
Yeah, and it's interesting how all of these promises are over a 4-year term, right? To your point, Foxconn and Wistron are already established manufacturing hubs. It's just a question as to how advanced they can produce to really be at the level that Nvidia needs. For TSMC has said, the Taiwanese minister did say in Taiwan that the plant here in the United States is not going to be the most advanced. So you have to keep in mind, too, that companies like Nvidia or AMD may not be able to even produce on American soil if the technology isn't as advanced as they need, especially when they're putting out chips on an annual cadence. And these fabs can take anywhere between 3 and 5 years to build. They have to get exemptions. They have to get licenses. They need to find the talent, which I don't think we preface enough. TSMC Arizona is a great example. I was there 2 years ago interviewing the president of TSMC Arizona, and the topic of the interview was the fact that they had to fly in so many workers from Taiwan. His argument was that Americans were not skilled enough to work with advanced equipment makers like ASML, so they had to fly in people. So is that going to be the case for all of these other promises?
Well, very quickly, how much of this is also maybe just let's not have everything in Taiwan for obvious reasons?
Right. And a lot of manufacturers have already been switching their production and manufacturing to Mexico. Cisco is a great example, too. They've been doing that for several years. So this is an opportunity to get the ball rolling, but we need to be realistic about the timeline.
As confidence improved due to a reduction in U.S.-China trade tensions, Nvidia ended a recent losing run by closing more than 3% higher on Friday. Due to Nvidia's reliance on Chinese supply chains, the U.S. announced late Friday that industries such as semiconductors would not be subject to retaliatory tariffs. Nvidia's year-to-date drop is above 20% after Friday's comeback. However, Wall Street remains largely optimistic. A 12-month average price objective of 169.6, or a 52.9% increase from current levels, was given by the analysts they watched. On April 11th, Atif Malik of Citi reduced his price estimate from $163 to $150, citing a decline in GPU demand brought on by hyperscaler budget cuts. Nevertheless, Citi maintained its buy recommendation and pointed out that regional trade exemptions would help Nvidia. The same day, UBS stuck to its $185 goal, citing Taiwan's robust export figures and the ongoing need for data centers driven by AI. While reiterating Nvidia as its top compute choice, TD Cowen also reduced its estimate from $175 to $140. On April 8th, KeyBank reaffirmed its overweight call and $190 target, pointing to immediate supply constraints but promising revenue growth in the future. As one of the most revolutionary forces in contemporary technology, Nvidia Corporation has cemented its place as the clear leader in the fields of artificial intelligence and rapid computing. As of April 2025, Nvidia has an astounding market valuation of over $2.3 trillion and an annual revenue of $130.5 billion. Its data center business, which currently accounts for 88% of its total revenue, is the main driver of its domination. Nearly every significant hyperscaler in the world is powered by Nvidia's flagship AI processors, such as the H100 and A100, as well as its larger AI platform, which includes CUDA, DGX Cloud, and AI Enterprise. The data center business, which commands a 95% share of the AI accelerator market and 80% plus of the entire GPU market, is the focal point of the investment thesis, even though its revenue growth has moderated from the explosive 427% YOY in Q1 2024 to 93% in Q4. High customer lock-in is produced by its exclusive CUDA environment, which also sustains a long-lasting competitive moat supported by scale, trusted brand equity, and intellectual property. With the data center opportunity predicted to reach $1 trillion by 2028 and $1.7 trillion by 2035, Nvidia's total addressable market is growing quickly. Additionally, the company's entry into CPUs adds $35 billion in TAM, and the gaming GPU market is anticipated to increase at a 21% CAGR through 2028. Despite this dominance, there are beginning to be indications of a slowdown. Nvidia's capacity to sustain pace as the AI cycle progresses and competition intensifies is put into question, as evidenced by its Q4 2024 revenue beat of 4.9%, the lowest in 2 years, and its free cash flow margin, which dropped from 50.7% to 39.5%. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
And I do wonder, if the price action that we're seeing in the pre-market, you're seeing shares of Nvidia move higher, as you mentioned, Apple move higher, others in the tech sector move higher. But I wonder if the rally has a lid on it because President Trump coming out on Truth Social saying, quote, nobody is getting off the hook. So it seems like this is one of those another like temporary pauses. Jenny, what's your thought on that? And I know Dan Ives had some thoughts on these latest moves.
Okay, he definitely did, and my thoughts are pretty aligned with Dan Ives when we have this focus now on so much of the U.S. tech, which is hopefully edging back from what is seen as a pretty catastrophic decision on right now so much of our tech growth and so much of what has fueled our markets for quite some time. So with all of this focus on these negotiations and what happens next in China, I do think that this has been a high stakes really negotiation match, or what Dan Ives calls a poker game between Beijing and DC, and basically likens it to the fact that right now it's critical to the economy and the markets this week, but also he said in so many other ways that this is a Category 5 price storm for U.S. consumers. And this was a few days ago, but he also saying this could be a catastrophic event for a lot of the tech growth that we were expecting for this year. So he doesn't say right now that this is necessarily a shoe-in, and this piece of news is a sigh of relief. He still says supply chain and the foundation of the U.S. world right now remains in a bit of a influx. And I think that I entirely agree with. I think last week was that huge sigh of relief. That does not mean that we are out of the woods yet.
However, analysts continue to project strong top-line growth of 24.6% in 2026 and 59.1% in 2025, contingent on the company's capacity to expand into new sectors like as robotics and automotive, while stabilizing its data center business. While gaming continues to generate $11.35 billion in revenue, Nvidia has maintained a non-GAAP gross margin of 75.7% and a net margin of 56% despite recent constriction thanks to high-margin AI GPUs. Nvidia maintains its operational discipline and leanness. R&D accounts for 9% of revenue, which is more than SG&A, which only accounts for 2%. This indicates a strategy that is centered on innovation. With $43.2 billion in cash and $10.3 billion in debt, the company's balance sheet is a fortress, providing it with plenty of room for strategic reinvestment and shareholder returns. With $8.1 billion in dividends and buybacks last quarter, capital allocation is still shareholder-friendly, even if the number of shares decreased by 0.7% and stock-based compensation dropped to 3% of revenue. Once a worry, valuation has returned to reality. A 2026 PEG ratio of 0.9 indicates that the company may be cheap in relation to its growth prospects, and a forward PE of 25.2 and EV sales of 13.5 show a markedly de-risked entry point. Nvidia's vast innovation pipeline, unrivaled software ecosystem, and structural leadership in AI hardware position it for sustained long-term outperformance despite headwinds in free cash flow and gross margin compression. As the next era of AI adoption develops, Nvidia offers investors a unique combination of growth, durability, and value support, giving it an outstanding risk-reward potential. Following the U.S. government's decision to postpone new tariffs on gadgets, such as chips and cell phones, Bank of America is still optimistic about leading semiconductor companies. Among the company's preferred stocks are Nvidia and Broadcom, and analysts point to the short-term tariff freeze as a benefit that permits more conversation about important tech supply chains. According to the memo, around half of the demand for electronics worldwide is met by semiconductors. Analysts saw the delay as an opportunity for U.S. authorities to refocus their attention on increasing domestic chip manufacturing, even though it is not a cancellation. President Trump said that sectoral tariffs might still be implemented in the upcoming months, which might have an impact on American devices built in China with processors that are imported. Bank of America anticipates that the hundreds of billions of dollars in U.S. investments from Apple, Nvidia, and Taiwan Semiconductor Manufacturing Company will have an impact on future policy decisions. Through its facilities in Arizona, TSMC is anticipated to manage the majority of front-end chip production for its clients in the United States. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Charles.
Again, this is another one that could be very sympathetic, and this is really important for the markets that both Apple and Nvidia start to bid up here, because we've seen what Nvidia did for the markets last year. Even when Apple was a bit of a laggard, Nvidia was marching up. Markets continue to march up. Nvidia is the clear Pied Piper for the semiconductor sector. And of course, this is the sector that's going to benefit the most from these exemptions. So I'm watching Nvidia to be that leader. I'm really watching them to hold, pretty much right here where it's at, right around this 110 to 112 price. I believe that if they kind of make this little baby pop towards 119, this is kind of the start of where we're going to be looking for a short-term breakout through that 119, 120 price and make this run to test that 200-day moving average at around 125. And again, it's really important that we see Apple and Nvidia hold their ground and really start working higher, because those two alone could really drag the markets up with them. So for me, if we're taking this bullish stance in the near term on the heels of this news, these are the two names that we really have to focus in on more than any others. And, frankly, if Nvidia just takes out today's highs at any point, whether it's tomorrow, whether it's today, whether it's Wednesday, we're going to see that retest of the 50 where they've struggled, but recapture above that level is really going to give, in my opinion, a signal to the markets to kind of go risk on in the near term, and we could really start seeing the semis, and most notably Nvidia, make that fast rise. I believe that 125, 126 is in the picture if Nvidia could garner a little bit of momentum above this 115 price here this week.
Okay, well, we have a little bit of nibbling happening. Once again, we're off the highs of the session. But Rick, take us through what the technicals look like for Nvidia.
Yes, this one, a bit of a question mark, I think I might say here, because on one hand, we are breaking out to the upside from our downward sloping, falling wedge type shape here. We pushed above that trend line a few sessions back here. We're treated back within those boundaries. Then on Friday, closed above that trend line and our yellow 21-day exponential moving average. Today, we are hanging on above that confluence that I just mentioned, but we stalled out at our purple 252-day EMA that comes in just shy of 115. So that could be one level to watch going forward. So if we were to move beyond those areas here, the ceiling, I think you could say, for this recent range based on our close is around 122. So that could be a push beyond that area could result in the breakout like I was discussing earlier here. So we can also see this red line here, a low point from here, a low point from there once again. Recently has been seen price bouncing around it here, but still an area that could hold a little bit of weight. Unlike our previous chart, we are not breaking above that downward sloping red trend line on the RSI, even though we are just a hair below that 50 midline. Look for a close above that level for a further bullish signal. Now, when we look at where our volume comes into play here, we can see that right up here, our point of control near 118 aligns with our -1 standard deviation channel, and it's kind of in the thick of our two lines that we mentioned earlier, our red line and our pink line between 113 and 122. So this is really an area where there's quite a bit to work through for price, but if it does and pushes to the upside, it could be a really interesting situation.
It does seem like there's some choppiness to work through right now, and we're seeing it in the price action right now in Nvidia as we see a little bit of a fade overall in the broad market with Nvidia, some of that occurring there. Still holding on to an advance today off the back of this news of exemptions.
Nvidia was mentioned when Jim Cramer and his co-host went over the AI and semiconductor trade again. Cramer discussed a significant shift in the market for data centers from hyperscalers to more specialized, smaller purchasers. This is his analysis. All right, this is my hypothesis, and approved by the authorities thus far. Hyperscalers are giving way to those who require the newest and finest. What does that signify? It should be noted that the current ship, Grace Blackwell, sold out. And I will tell you that you need as many as you can obtain if you are a robot manufacturer. You need all of these self-drive. They're not hyperscale. In my opinion, those who believed that Nvidia was a quick fix may not have been so simple. Jim Cramer has divided the Magnificent Seven stocks into levels according to their advantages and disadvantages. Despite placing Nvidia in the second tier, he defended the company's financial stability and long-term worth. Since its peak, Nvidia has dropped 36%. For example, 3 weeks ago at the Nvidia GTC show, there was absolutely no indication that the AI theme was slowing down, but investors wanted to throw in the towel. Thus, everything AI has been selling like a freight train. Perhaps you could take a back seat and wait for Nvidia to sell. The good news is that it only sells for 21 times this year's earnings. The best firm in the world is this one. It's also cold comfort that its valuation is less than half of what it was on average over the previous 5 years. The stock will soar, in my opinion. In an attempt to shift some of its production to the United States, Nvidia announced on Monday that it had put more than 1 million square feet of manufacturing space into service in Arizona and Texas to develop and test AI chips. The chipmaker announced that Nvidia is constructing supercomputer manufacturing facilities in Texas, alongside Foxconn in Houston and Wistron in Dallas, and that TSMC's chip operations in Phoenix, Arizona, have begun producing its Blackwell chips. Nvidia stated that it is collaborating with Amkor and Spill in Arizona for packaging and testing activities. The business plans to create up to $500 billion worth of AI infrastructure in the United States during the next 4 years, with mass production at the Houston and Dallas plants set to ramp up in the next 12 to 15 months. For the first time, the engines of the global AI infrastructure are being constructed in the United States, said Jensen Huang, CEO of Nvidia, in a statement. Adding American manufacturing improves our supply chain, increases our resilience, and helps us better fulfill the amazing and expanding demand for AI chips and supercomputers. The news was made a few days after Nvidia purportedly struck a domestic production agreement with the Trump administration, narrowly avoiding export restrictions on its H20 chip. According to NPR, Huang's pledge to invest heavily in parts for AI data centers situated in the United States saved the H20, Nvidia's most sophisticated chip that is still able to be sent to China. In an effort to win over the government, numerous other AI firms have capitalized on Trump's America First stance on AI. In its fiscal year 2025, Microsoft committed to investing $80 billion to build AI data centers, with half of that investment coming to the United States. In January, OpenAI joined up with SoftBank and Oracle to launch the Stargate project, a $500 billion data center project in the United States. In recent months, Trump has used force against some of his allies to achieve his goals. According to reports, he warned TSMC that if it didn't establish new chip manufacturing in the United States, it would be required to pay a tax of up to 100%. Nvidia asserted that over the next several decades, its U.S. chip manufacturing projects may generate hundreds of thousands of jobs and billions of dollars in economic activity. However, initiatives to expand the local chip-making sector confront significant and increasing obstacles. In addition to a serious scarcity of experienced frontline workers for chip assembly, China's retaliatory tariffs and trade restrictions threaten the availability of raw materials needed to make chips in the United States. Meanwhile, further investments from semiconductor companies may be discouraged by the Trump administration's efforts to weaken the CHIPS Act, a 2022 law that awarded billions in grants to chip makers. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Partners, the booth is loaded up. When I even suggested to be on around the bell, particularly today, no way. You guys are getting ready. How's it looking?
Yeah, so coming into this trading session here, clearly news that we got over the weekend. I'll say somewhat conflicting news, but overall tone is positive. We're seeing what we wanted to see, right? We closed the session on Friday with positive results. A lot can happen over the weekend. So being able to kind of have this follow through to this week, I think is important. We have a lot of economic data coming out this week. We've got some Fed speakers tonight. We've got our earnings season that's going to continue, and we're probably going to hear that same rhetoric over again from the banks that, yes, earnings reports were good due to trading activity, but the unknown outlook moving forward, the turbulence that we're going to see in our economy, that's going to be a tone that we're going to hear. But again, it's what we're seeing today, what we saw last week, over the weekend. This market is just so dependent on tariff headlines, and any headline that we get is going to move this market. Positive today, get the VIX back down to the low 30s, which is a good sign that we're seeing now. Obviously, we got to get that down lower, but moving into today, a lot of green on our screens.
And you're expecting more volatility throughout this week, I'm sure.
Yeah,
with each headline,
yeah,
right?
We're not going to see a one-way market this week, right? I mean, we'll take what we get today, but we are going to continue to see a lot of volatility in this market again because the headlines are going to dictate where this is going. This is all unfolding. This is all playing out. I know the 90-day pause is something that is helpful for our markets, but a lot can happen in that time.